How much money do you need to start day trading? You can start day trading with just $100, but you will need at least $25,000 if you want to trade without restrictions. There are two types of accounts that brokerages offer to their clients: cash accounts and margin accounts. Cash accounts can be opened with almost any budget, with no minimum deposits. The functionality of cash accounts is very straightforward. When trading, only the money deposited is available to buy stocks. The benefit with a cash account is the max losses are always limited to the amount originally invested. Yes, it is that simple. But there are some disadvantages for anyone who wants to become a day trader. When you sell stock, it will take 2 days for funds to settle. In other words, if you buy and sell your stock on a Monday, your funds won't be available until Thursday. Trading is a financial transaction, and as with any financial transactions, payments have to clear. This puts limit on your trading ability. If you have $100 and make a profit of 5% on each possible sale in one trading week, you will only make about $10 during that week. Why? Because of that 2-day lag. In 1 week, you can only move forward with 2 trades, and you profit about $5 each time. Another issue with cash accounts is that you cannot short sell stock. Short selling is when you take advantage of a stock's downward movement by selling at a high price and buying back at a low price. Traders will borrow the shares from their broker to sell. Once the stock is later purchased, the shares are returned to the broker, and the trader will earn the difference in prices. Generally, a cash account is good for beginners because it limits your risk, but it also limits your purchasing power and trading opportunities. Margin accounts is a bit more complex. It allows you to borrow money from your broker so you can invest more funds that you own. To open a margin account, in most cases, you need to deposit at least $2,000. But $2,000 won't be enough to fund regular day trading activities. Margin accounts require a minimum available balance of $25,000 to be allowed to trade every day. If you have less than $25,000, you can only make 3 day trades within 5 business days. Break this rule and your account will be suspended. From a practical standpoint, if you want to day trade using a margin account, you should have a balance of at least $30,000 so you have more than the required minimum and you can use $5,000 and your broker's money for daily trades. Here is the bottom line. A margin account is not a good idea for beginners because you must make the minimum deposit to open an account. You face higher risk since more money involved. You pay interest on the amount of the margin, the money you borrow from your broker. You need seasoned money management skills. You need $25,000 on the available balance to avoid violating the PDT rule. It's possible to lose more money than you initially invested when buying or short selling stock on margin. If you're just starting out, you can open a cash account with any budget. No minimum deposit is required. There's less risk since you only lose the deposited amount. You can upgrade to the margin account at any time, once you meet the requirements. One key disadvantage of a cash account is 2-day settlement time, which limits your purchasing power to only what you have available at the moment. Now, let's get back to the opening question. How much money do you need to start day trading? The real answer depends on your budget and your preferred trading strategy. You can start with $100 and risk only that investment, or you can go all in, deposit $30,000 and call yourself a day trader. If you are not ready to make any decision yet, it is strongly recommended that you begin your day trading journey with a virtual stock market simulator. Would you start with a virtual simulator or use real money? Tell us in the comments below.